Hello, I'm Jeff Tennant. Today's September 19th, 2015. My last call said I was looking for lower prices and possibly much lower, which we got. We had a target of 1981.65 from September 16th. I believe Thursday evening I said it was a failed target. That's actually not correct because the preferred time frame ended early Friday, and that one actually printed within its preferred time frame. This target was a failed target, 1969.85, and that one printed and there was resistance over it. We still have targets in the 1940s. I think that unless we have a gap over today's high, Friday's high, or take that out quickly, which I view as extremely unlikely, that this is a very negative pattern, gapping down, hitting a series of lower lows and holding on to them. And it wouldn't surprise me to see targets hit in the 1940s on Monday, even though there's nothing in the system which requires it. During the day, we did have a sell signal, and that worked. Let's look at some other things. The low on Friday was a TDST line. There is support under the line, which goes 1 bar under it. If we break more than that, it's a very negative formation. Particularly critical will be if we break through the close here, TDST line of 1921.22, if I remember. Yeah, 1921.22. If we break through that by more than a bar, it's a major break of support and should lead to much lower prices. Let's see how much lower is possible. First, let's remember we're on a monthly sequential sell signal. This began in late 2012. It took years to form this very bearish formation. It's going to take years for the decline to play out. I've already said I think SPX is going to trade under 1,000. I think the 900 area is probably more like it. How low could the first leg be? Well, here's your right stilt. Here's your left stilt. This is the height of the right stilt. You'll see it's quite equal to the height of the left stilt. If you want to include this consolidation, not really a stilt, but it's really pretty much the same height. It's pretty hard for me to call this a diamond on stilts. It doesn't look like much of a diamond. But a consolidation marked by symmetrical stilts like this often has the same properties. And to get one's target prices, you set up a Fibonacci grid. This is 38.2%. 61.8% comes pretty much at the low of this current leg. And the target of this pattern is just over 1,700. I know that seems pretty far off, but if you look, there's a lot of symmetry here. This high and this high are the same. I don't think that's an accident. This low and this low are the same, and the only difference really is we have a Fibonacci retracement along the way here. So you've got a very symmetrical pattern here. I think you have to view the whole pattern. You set this thing equal to 50% and 100%. It's pretty much at the same level, which is just over 1,700. There should be some stop-offs on the way down. One stop-off is at the origin of the left stilt, which happens to be a MEJT target price. The other target prices can be found by setting this equal to 61.8%, and you'll see that we hit other MEJT target prices pretty much on the nose in the high 1700s. And if and when these hit, every MEJT target from 2014 will have printed. So I'm looking for lower prices Monday, which will be invalidated if we have an unlikely move over today's high quickly. It wouldn't take much for the decline to go into a waterfall mode, and with a few stops along the way, end up just over 1700 on the SPX, and that is today's call.